Hey everyone, buckle up, because the crypto world is spinning like a top today.
You can say that again?
We're diving deep into Bitcoin's near miss of the 70K mark. Meme coins going bonkers.
Bonkers is right.
And even Bitcoin billionaires changing their tune on self-custody.
Talk about a roller coaster, eh?
Exactly. So let's get this show on the road. Bitcoin got oh so close to that $70,000 mark over the weekend,
Yeah.
only to slam on the brakes.
Right.
What's the story there?
Well, it seems that $70,000 mark, it's like a wall.
A wall.
Yeah, traders hit it and they hesitate. It's become a psychological barrier. Until we see a clear break above it, things are going to be rocky.
Rocky, you think?
Definitely. And don't forget the leverage some traders are using. They're borrowing to pump up their bets, and when the price dips, they're forced to sell.
Ouch. So maybe not the best time to bet the farm on Bitcoin then.
Probably not.
But hey, maybe meme coins are a safer bet. Mostly. But seriously, the Simon's Cat meme coin, CAT, shot up over 60% today.
It did.
There's got to be more to it than cute cat videos, right?
You're right to be curious. While meme coins can be unpredictable, CT's surge stands out. Firstly, it got listed on Binance.
Binance, the big leagues.
Exactly. Getting listed there is a big deal, a sign of legitimacy. But what's really intriguing is that CT is directly connected to the Simon's Cat brand. This isn't just some random internet cat, it's a whole intellectual property empire diving into the cryptosphere.
So are we going to see Disney launching its own token next? What about Amazon?
It's definitely possible. This move by Simon's Cat opens up a whole can of worms when it comes to intellectual property in crypto. How will big brands use this tech? What are the legal implications? It's a whole new world of possibilities.
And legal headaches, I'm sure.
Most likely.
But speaking of big players, Binance itself seems to be facing some tough competition. They've been losing market share recently. What's happening?
Well, even the biggest fish in the sea have to watch out for sharks. Binance is still dominant, but it's facing some heat, especially from smaller, nimbler exchanges like Bybit and OKX.
Smaller and nimbler, how so?
They're pulling in users with lower fees, cool features, and a smoother experience overall.
So it's like David versus Goliath, but David has a really awesome trading app.
Something like that. And it's not just other centralized exchanges they need to worry about. Decentralized exchanges, DEXs, are gaining serious traction.
DX, right. Those are the Wild West of trading, yeah. More freedom, but also maybe more risk.
That's a good way to put it. DEXs offer something centralized platforms can't. More privacy and total control over your assets. You're not relying on a middleman, which aligns with the whole decentralized spirit of crypto.
So it's like choosing between the convenience of a big bank and the freedom of, well, burying your gold in the backyard.
Yeah, it's a pretty good analogy. And speaking of shaking things up, Bitcoin evangelist Michael Saylor got everyone talking with his recent comments about institutional custody.
Oh yeah, this is a big one. Be Your Own Bank guy is now saying, maybe we should trust institutions after all. What's going on there?
It's definitely interesting. Saylor, who's been a huge advocate for self-custody, holding your own crypto keys, basically seems to be softening his stance a bit. He's now saying that institutional custody solutions might be the way to go, especially for big-time investors.
So is he saying hardware wallets are dead? Should we all be rushing to JP Morgan to store our Bitcoin?
Whoa, hold on. It's not quite that simple. Saylor's point is that these institutional-grade custody solutions offer a level of security and peace of mind that might be appealing to certain investors, especially those dealing with huge amounts of crypto. But it definitely goes against the grain of crypto's decentralized roots.
Right, it's that whole not your keys, not your coins ethos that so many crypto believers live by.
Exactly. So while Saylor's comments might seem like a big change, they actually highlight a key tension point in the crypto world, the tug of war between traditional finance and the decentralized ethos.
That's like those old Western movies, the sheriff's trying to bring law and order to a town that's used to doing things its own way.
I like that. And you know what they say about those Westerns? Sometimes the most exciting parts are when those two worlds collide. Speaking of collisions, payments giant Stripe just made a huge e-splash in the crypto world.
Okay, what did Stripe do now?
They went and acquired the stablecoin platform Bridge.
Acquired, you say?
Yep, for a cool $1.1 billion.
Whoa, that's a serious chunk of change. They're not playing around, are they?
Not even a little. This acquisition is a massive vote of confidence in the future of stablecoins and their potential to change how we pay for things.
Okay, quick reminder for those of us who don't speak fluent crypto, what are stablecoins again? And why is Stripe so hyped about them?
Right. So stablecoins are cryptocurrencies that are tied to a stable asset, like the US dollar.
To keep things steady.
Exactly. This makes them way less volatile than Bitcoin or Ethereum, which is good for everyday transactions. And Stripe, being the payments giant that they are, see this as a massive opportunity.
So are we all going to be paying for our morning coffee with stablecoins soon?
It's definitely possible. Stripe processes trillions, yeah, trillions of dollars every year. Them moving into stablecoins could be a game changer for mainstream adoption.
A future where I can pay for anything with crypto. Sign me up.
Right. Imagine sending money across the world instantly with almost zero fees, all thanks to stablecoins.
Okay, I'm sold. But let's not forget about those of us still trying to navigate the current crypto jungle. You've been dropping some serious knowledge bombs today. Any other insights you can share before we wrap up this wild ride?
Well, we haven't even touched on what investing legend Paul Tudor Jones has to say about the markets or what those Ripple execs are hinting at about the upcoming election.
Oh, right. We can't leave our listeners hanging like that. Tell us more.
All right, so picture this.
Got it.
Tudor Jones.
Macro legend.
Exactly. He's saying, watch out for inflation.
He is.
Yeah, he thinks the U.S. is heading towards a scenario where they'll have to inflate their way out of their massive debt.
I like the sound of that.
It's not good, right? That debt has ballooned to almost 100% of GDP.
Wow, 100%. So what's someone like Paul Tudor Jones doing to prepare for this?
Well, he's recommending a diversified approach,
Makes sense.
a basket of assets that includes gold, Bitcoin, commodities, and even some exposure to the
The
NASDAQ.
NASDAQ. That seems a bit counterintuitive, doesn't it?
You'd think so, but Tudor Jones believes that with low interest rates and continued economic growth, we'll see a risk-on environment where tech companies could thrive.
So he's saying don't put all your eggs in one basket?
Yeah.
And definitely not in bond market.
Precisely. Now, let's shift gears from macroeconomics to the world of politics.
Okay.
Things are getting interesting with Ripple.
Ripple. Did they go quiet after all that regulatory drama?
They have been keeping a low profile, but that doesn't mean they're out of the game. Chris Larson, the co-founder of Ripple, just made a big move.
What did he do?
He publicly endorsed Kamala Harris for president.
No way.
And he's putting his money where his mouth is. He pledged a $10 million donation to her campaign.
$10 million.
Yeah.
In XRP.
You got it.
That's a bold move.
It certainly is. And he's not alone. Brad Garlinghouse, the CEO of Ripple, he hasn't endorsed anyone specifically, but he's been vocal about supporting policies that help blockchain and crypto innovation, no matter who's in charge.
So crypto is becoming a bigger deal in politics, it seems.
Absolutely. As crypto grows and becomes more mainstream, we're going to see more politicians and regulators trying to figure out what to do with it.
Like crypto is finally old enough to vote.
Haha, something like that. It just goes to show how much influence crypto is gaining. We're not just talking about trading profits anymore. This is about shaping the future of finance.
From magic internet money to campaign buzzwords. It's pretty wild when you think about it. But for those of us still trying to wrap our heads around it all, what are the key takeaways from today's news?
Well, I think it's important to remember that the markets are driven by more than just numbers. Remember Bitcoin struggling to break through $70,000.
Right.
That shows how much psychology plays a role.
So emotions matter as much as charts and technical analysis.
Absolutely. And speaking of the unexpected, those meme coins, as crazy as they can be, can't be ignored. Look at Simon's Cat. It shows how big brands are starting to see the potential of crypto, even if it means jumping into the meme pool.
True. Sometimes the silliest trends can lead to big opportunities. Anything else we should be watching out for?
Definitely keep an eye on traditional finance and how they adapt to this whole decentralized revolution. Stripe buying bridge is just the beginning. We're going to see more big institutions dipping their toes and maybe even diving headfirst into the crypto world.
It's like watching two worlds collide in slow motion, the old guard of finance and this new wave of crypto innovation. Who knows what will happen, but it's going to be one wild ride.
Couldn't have said it better myself.
And on that note, we'll leave you to navigate the ever-evolving world of crypto. Until next time, stay curious.